Anthony Grasso here, bringing you financial news that you can use. In this series of videos, I'm going to go over a few stocks in different sectors to help recession-proof your portfolio. In this video, I'm going to do a stock analysis on Micron Technologies, which is a large cap blend in the information technology sector. I'm going to go over a summary of the company, its product offerings, recent headline news, analyst projections, financials, and give them my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribe and hit that notification bell so I hear daily stock and cryptocurrency reviews and recommendations from an unbiased source. So let's get right into it. And as always, folks, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 6 free stocks by using my referral link in the description down below. Now, Micron Technologies designs, manufactures, and sells memory storage products worldwide. Now, the company operates through about 4 different segments: compute and networking business unit. The second one is the mobile business unit. Third is the storage business unit, and the fourth is the embedded business unit. Now, it provides memory and storage technologies, comprises the DRAM products, which are dynamic random access memory semiconductor devices with low latency that provide high-speed data retrieval. Now, the NAND products that are non-volatile and rewritable semiconductor storage devices, and the NOR memory products, now which are non-volatile rewritable semiconductor memory devices that provide fast read speeds under the Micron and Crucial brands, as well as other private labels. Now, the company also offers memory products for the cloud server, enterprise, client, graphics, networking markets, as well as for smartphone and other mobile device markets. Now, the solid state drives and component level solutions for the enterprise and cloud, client and consumer storage markets, other discrete storage products in the component and wafers, and memory and storage products for the automotive, industrial, and consumer markets. Now, it markets its products through its direct sales force channel, as well through a channel of distribution partners. Micron Technology was founded in 1978 and is headquartered in Boise, Idaho. Now, let's go ahead and look at some of the news of the company that's going on right now. So Morgan Stanley has just downgraded the stock to underweight from equal weight, along with assigning shares to a $56 price target. To me, that's really extremely low. That causes about a 3% loss in the other day's trading. Now, economic concerns with impact of Micron's key revenue sources represent a worrisome headwind. Now, this specific Morgan Stanley analyst, Joseph Moore, sees a dim outlook for Micron, disagreeing with the idea that the company has a more favorable framework following a conservative guidance for the upcoming quarter ending August 31st, 2022. Now, while Micron likely guided conservatively relative to their outlook at the time, the market continues to deteriorate, both volume, which is the primary reason for the weaker guidance, and pricing, more stated in the research notes in this article. Now, further, the analyst suggested that the upcoming pressures impacting Micron is less about demand and more about inventory, as consumers in all markets listened to the substance of Micron's commentary that shipments this quarter and next will be below production, with a large Micron inventory build by year end, and start to release inventory buffer. Now, thus Moore noted that multiple customers are taking a more aggressive approach to inventory management in light of this commentary. Now, I think you can call this guy kind of like a boomer bear, right? So going on to another article that went over 20, that rated 26 analysts all together. They have a greater weight regarding bullish ratings versus bearish ratings regarding this stock. And there's also another article I came across where, you know, the recent Senate bill, that the CHIPS Act, and that will definitely benefit companies in the semiconductor space, chip space, which is good, which is great news for Micron. But let's go ahead and look at some of the fundamentals of the company right now. So the stock is currently trading, last time I checked, to $61.29 a share, with a market capitalization of about $67.9 billion. Now, the company is projected to have about 31.38 billion in revenue for the fiscal year of 2022, with earnings coming out to be 8.9 roughly. Now, the revenue projections are the slightly decrease over the next year in 2023 to be around $30.2 billion of revenue by the end of fiscal year 2023, with earnings coming out to be around $7.1 billion. Now, but you have to look at the revenues going into 2024. They're projected to drastically increase to around $36.2 billion, which is $5 billion more per year right now than, and they're going to have earnings of roughly 11.41 billion. Now, these projections are pricing in the possibility of a mild recession going into 2023 and then coming back strong on the other side of it in 2024. The stock is currently trading 9.5% below the estimate fair value of the stock right now. So the earnings are forecast to grow about 6.7% per year on average, and the earnings grew about 140% over the past year alone. Now let's go ahead and look at some of the valuation analysis, profitability analysis, growth rates, and financial strength of this company right now. So looking at the valuation analysis that I was looking at, Micron is in the semiconductors and semiconductor equipment industry and has positive earnings. Therefore, the price to earnings growth, PEG, and the PE, price to earnings ratios are the most appropriate valuation measures. Now, the price to book ratio is excluded because it most likely underestimates the company's book value by overlooking, hidden assets such as intellectual property. And the price to sales ratio is also not as meaningful as the P or PE or the PEG ratio due to the company's positive earnings. So Micron seems valued at a discount right now with the PEG value at 0.66 times, one of the lowest in the semiconductors industry, which is supported by the PE ratio of 6.99 times. And that is also one of the lowest in the industry. Now, looking at the profitability analysis, Micron is one of the more profitable companies in the semiconductor space with a net margin of around 30.54%. Now, its net margin and operating margins are both among the strongest of any of its peers, while its gross margin is in line with the industry median. And looking at the growth coming up, now the earnings growth at Micron did outpace revenue growth over the past trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, the result was better than the average company in the semiconductor space. And as I said before, it's definitely going to stagnate a little bit in 2023 and then come out on the other end in 2024 pretty strong, and that's the current projection. Now, looking at the financial strength analysis, Micron's debt to total capital ratio of 12.38% is in line with the semiconductors and semiconductor equipment industry's norm, with the interest coverage ratio of 250 times and a quick ratio of around 2.44 times. The company should be able to comfortably recoup its debt. So let me bring it back here. So what do the analysts say specifically regarding Micron? So the current analysts out there have a moderate buy recommendation at the moment, and the average price target of Micron Technologies over the next 12 months is around $81.18 a share, with a high of $165 a share and a low estimate of $100 or $50. Now, going over a few of the analyst reports that came across, the Forward Equity Research Report has a hold recommendation on Micron. It's a result of their systematic analysis of the three basic characteristics that they look at. They look at the earnings strength, relative valuation, and recent stock price movements. They said the company has generated a negative trend in earnings per share over the past 5 quarters. However, while recent estimates for the company have been lowered by analysts, Micron has posted better than expected results, and they have. Based on operating earnings yield, the company is undervalued when compared to all the other companies they cover. And that is true. Micron is a very undervalued company at this moment in time. Now, the share price change of the past year indicates that Micron will perform poorly over the near term. Now, going to another report I was looking at, the CFRA report states that there's a buy recommendation on Micron Technology. Now, their buy reflects their view of the valuation of the memory content growth story. So despite a well-known inventory correction taking place that we saw in that Morgan Stanley article, we like growth prospects led by Micron's strategic portfolio mitigation towards more advanced and higher value products, the DDR5, high density server modules, and solid state drives. Now, the CFRA report said they think that Micron is making a good progress towards a technology perspective. And they have the 1 alpha, the 1Z DRAM nodes, and the 176 layer and NAND drive volume. Now, while we see more cash return to investors, we see the transition to DDR5 ramping in fiscal year 2022, and like greater emphasis on computer express link, the CXL memory products, which should support higher return on investment and shareholder value. Now, long term, higher volume cost per bit reductions and an improving mix of specialty DRAM and higher end NAND chips will support margins. Now, the risk to their analysis is lower than expected sales of computers and consumer products, electronic products, faster than expected capacity expansion in the memory industry, and less than anticipated cost cuts. So, am I a buy, hold, or sell recommendation on Micron Technologies? Here are my thoughts. First, you have to look at what kind of recession do you believe we're heading into right now for the specific consumer electronic market. You know, will it be a mild recession or a severe recession? Now, right now, it looks like it's going to be a mild recession. Some of the decline in consumer spending is due to the inflation tax on consumers at this moment in time. Now, Americans right now are cutting back on expenses and basically reducing their discretionary spending to afford higher prices on necessity items. So you're not going to be spending money on that $2,000 iPad if you need to actually get groceries. It also seems that Americans are changing their minds about buying new homes and cars at this moment of time. Now, that being said, our job market is still extremely strong. So now Micron has taken a big hit since April, with a small bounce back in July on the news of that of the bill that's going to be coming up. Now, I believe we're heading into a mild recession right now, and I think the market is already pricing into the anticipation of a deeper recession in the stock price of Micron at this moment in time. Now, this stock has already taken the hit, so to speak. Now, the stock is trading well below discount right now based on the PEG and PE ratios. So based on all of that, I am a buy recommendation on Micron with a 12-month price target of $81 a share. I believe that Micron Technologies can weather this economic storm and come on top. Now, there are cautions to my recommendation, though. If we go into a severe recession, you might want to pull back in the short term from buying Micron Technologies because, you know, that anything having to do with tech in a deep recession is going to get crushed. But what are your thoughts? Do you think we're going to have a mild recession, or do you think it's going to spiral out of control into a deep recession? Please leave your comments down below. And as always, folks, don't forget to smash that like button down below. It definitely helps. And consider subscribing. Hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. And in the next videos, folks, we're going to be doing more stocks on how to recession-proof your portfolio and the potential stocks, the top stocks that I think you should look at going into the near future. Until the next video, folks, ciao.